Okay, so we'll get started. Hi, everyone, and welcome. I'm Tim Sylvester, and I'm being joined today by Chris Saatchi, the sales director over at the Australian Bond Exchange. Thanks for joining me, Chris.
Thank you for having me, mate. Much appreciated.
So obviously today we've the Bond Exchange has a new product launch coming up. So we're going to take the time to take investors through the new products first, obviously, but also give new investors who haven't had the chance to invest with the Australian Bond Exchange yet a bit of background and go through the business as a whole, so everyone can get a good idea about how you guys go about sourcing product and providing these high yield, safer investment solutions to your current clients, and how obviously new investors can benefit from that. So today's session, we're probably going to go for about 25 minutes to half an hour. And if you have any questions, we will be doing a Q&A session at the end. So pop them into the chat as you see fit, and we'll get to as many as we can. But if we run out of time, then we'll obviously get back to everyone individually. So before we get too far into it, a bit of housekeeping. Today's information is general in nature. We have not taken into account anyone's personal financial circumstances or objectives. And obviously past performance is no indication of future performance. Contact details. So to get the Bond Exchange, you see our phone number attached there. And if you want to email the Bond Exchange, support@bondexchange.com.au. And obviously Chris, who is joining me today, if you want to reach Chris directly with any product related inquiries or questions, feel free to email him at chris.saatchi@bondexchange.com.au. Now, with that out of the way, what we're going to cover. So for all those new investors joining us, a bit of the background about the Australian Bond Exchange, how they got to be where they are, the current market conditions that they find themselves in, and why investors are obviously looking at fixed income solutions more now than what obviously a lot of people have seen in the past. A bit about the products that the Bond Exchange has brought to the market, unique products, first of their kind, the processes for investors to get involved, and obviously what we're all here for, the new product, which is soon to be released to the market. As I mentioned, there'll be a Q&A at the end, and we'll endeavour to get through as many questions as we can. But everyone who is watching this today will get sent a recording anyway. And if you have any questions during the time, we'll get back to you in a timely manner. So, background of the Australian Bond Exchange. So, who they are, how they got to how they got to be where they are now, and obviously a listed business. They listed on the ASX late last year. So, Chris, run me through. You've been there for some time now. Run me through the business, how you got to be where you are, and why you do what you do, basically.
Yeah, look, the business was founded in 2015 by 4 founders, including our CEO, Brad McCosker. And their whole aim and goal from day one, it was to provide access to everyone in the Australian market. Now, as you know, Tim, it's been a lot more. It was difficult for people to get in with minimum investments around that $500,000 mark. We've changed all of that. We're giving everyone the opportunity to come in on any new issue straight away with a minimum investment of $10,000. So that has been one of our key components and key goals, keeping in mind safety with all of our investments to the highest level we can possibly do. And that's kind of been the goal from day one. They've done an extremely good job with it, and being listed on the stock exchange, I believe it was December last year, has really added that extra level of comfortability and safety from an investor point of view, knowing that we are, the real deal, so to speak, and unlike a lot of those things out there at the moment in the market with scams and so forth, we are well and truly above that and looking out for those investing.
And yeah, obviously, like you said, being a listed business only helps to that credibility. And you'll see it through the Australian Bond Exchange's advertising that they do regularly, this recurring theme of access for all. So bonds have traditionally been a very, very hard, or more so the over-the-counter bonds have been a very hard asset class to access for particularly mum and dad investors. So the Bond Exchange's mission is exactly that: give access to high-yielding, safe products that the investors traditionally wouldn't have been able to get. Now, for all the people who aren't familiar with the asset class, and obviously we have some new investors here today, give us a run through of what a corporate bond is, or what corporate bonds are, and obviously a bit more about the asset class as a whole, Chris.
Yeah, look, the corporate bonds is what we focus on, which is a fixed income security with renowned organisations that are providing you that fixed return over the life of the bond. So with the markets being as volatile as they are, Having a fixed income component where you're getting 4 to 5% per annum paid into your bank account, usually on a semi-annual or quarterly basis, is something that all of our clients have been wanting for a long time. With the bank rates the way they are at the moment, as you point out there, 0.2, 0.3 or so percent, having a safe or safer investment or asset class like a corporate bond to provide you with that income has been a huge, huge benefit to us and our clients.
Perfect. And bonds, as from my understanding, obviously sit somewhere between the risk spectrum, between a bit higher risk than your classic term deposits, but obviously far lower risk than your traditional equity investments, which obviously in the Australian market we're all geared heavily towards equities and properties. So this is a great opportunity for investors to diversify further and get access to products they haven't before. So
absolutely.
How can investors, like everyone watching today, obviously access or utilize these products in their portfolio?
Oh, look, I mean, access is quite easy, and we'll go through that detail later when it comes to, looking at our products and investing through us. But right now, most people are coming to us where they're looking to put 30 to 40, maybe 50% of their portfolio into fixed income, particularly those who are at that retiree stage where they're looking for that safer income generation. So that is where we're seeing the portfolios heading in, where you're looking at 30 to 40 for 50% in the fixed income bracket.
Okay, so whether they want a completely fixed income orientated portfolio or basically diversifying their current investment portfolio further, bonds obviously are a nice, easy, safe solution for that.
Yes, absolutely.
Terrific. Okay, so we'll talk about the current market conditions. So at the bond exchange, you mentioned to me, Chris, that you've seen especially this last 12 months, a dramatic increase in people making inquiries to the company, not just about diversifying away from equities or accessing these products on their own merit, but more increasing higher returns because they have term deposits expiring and things like that. So let's take a look at the current market conditions, which has led to this, this influx of these inquiries on Chris's behalf. So at the moment, the US Federal Reserve has now clearly signaled its determination to get on top of the inflationary environment. The ongoing uncertainties and volatility in investment markets reinforce the need to ensure that investment portfolios are spread across multiple asset classes. And obviously, like I mentioned before, in Australia, we've been notoriously under-diversified across asset classes, being fixed income the large one. And obviously invest in carefully selected corporate bonds from leading global companies in sectors which are underrepresented locally. It provides such a diversification opportunity, as well as offering regular and reliable higher income than many alternatives. Now, for those investors watching today, if you want to keep up to date with what happens in the market, go to the Australian Bond Exchange Facebook, Twitter, and you'll be able to see the weekly market update that they send out to all their investors. And that's obviously free for everyone who's a member of the Bond Exchange. So tune in regularly to see how all that works. Now, in light of the state of the market, Chris, you guys have been working very hard in the back end over this last couple of years to bring products that the Australian market hasn't seen at all, and also have had a great response since you have launched them. So I'd like to go through two of your two of your previously issued products this last 12 months and how they work and basically how they can benefit the investors going forward. So first one being Jaguar. Current investors of the Bond Exchange would already know this quite in depth, but take us through the actual product, how it works, and why it was so successful when you launched it.
Yeah, look, obviously with the markets the way they are, every person on this webinar and also those that come to us outside of here are always looking at safety. So we've got a team out of Singapore who manage our structuring. So they look at global bonds in the world today that have got those big brand names behind them. And of course, it's twofold. We need to find those brands that are safe, as well as those that are going to provide the returns that our clients are looking for, which, as you know, Tim, is around that 4 to 5% mark. And when we looked at this opportunity last year, we came across Jaguar, obviously owned by Tata Motors, one of the biggest motor vehicle companies in the world. To get a bond like that, paying 4.5% per annum for a 5-year term, was a no-brainer for us. And when we took it to the market, we took it at a $12 million tranche initially. That got snapped up straight away. And unfortunately, or fortunately, depending on how you look at it, we had a lot of disappointed people who didn't get the chance to get in, which is why we were very lucky to be able to get a second tranche at par value for $8 million, which is why a lot of our existing clients now are in Jaguar.
So talk me through that, Chris, just quickly. So you obviously have a structuring team in Singapore that have their finger on the button, and they've got obviously a variety of products they're looking at all the time. And with the market, as we all know, timing is everything, and profit for bonds is made at the entry point rather than the exit point. This initial tranche of $12 million, obviously the secondary tranche came through. Was that a matter of timing, or how did the secondary tranche came to be? Was it a matter of you had that much demand, you had to go to the market to see if you could get it again? What led to the second tranche?
Look, there are a couple of things. Number one, we had a lot of disappointed people who missed out on that first tranche. So we had feedback to get more. The other factor is we got lucky where we were able to tap that and get another tranche at par value. With the way the exchange rates and things like that work, sometimes you might not get the opportunity to get another tranche at the right value, paying the right amount of coupons and so forth. So it's always very important to get in on that initial tranche because you know you're getting it at par value, you know your returns are fixed. With Jaguar, we were lucky. We managed to tap it again, but it came down to two things. Number one, high design volume and many clients who wanted to be part of it who couldn't get in on it on the first go around.
Okay, fantastic. And there is obviously secondary market availability. So if clients were looking to sell prior to maturity date, they have that facility. Have you seen much secondary trading either in the broker market or the individual client market on this product yet, Chris?
Yeah, look, that's a great question. I've got a good example with that one. So we had clients who invested in July last year, obviously looking at, keeping it for the life of the bond. But unfortunately, you just don't know what can happen down the track. And we had a few clients who had some situations occur where they needed to get that money back. Because of the fact that we've got a good hold of that secondary market being a unique value or unique product, we were able to buy it back off the client at that par value. We returned their money within 24 to 48 hours, and then we were able to sell it on to people who missed out initially. So that secondary market is definitely available. Clients can sell within 72 hours with us, and all they need to do is pick up the phone and give us a call.
Fantastic. And I think that's obviously important and on the forefront of all investors' mind at the moment is that liquidity. And if the X factor kicks in, then obviously having the ability to sell very quickly is important. So that's great to hear. And that leads us into the second product, which is the Xerox bond link security. Your second go at this product, and obviously based on the positive result you had from Jaguar, what led you to the Xerox trade, and run me through the ins and outs of this particular product, Chris?
Yeah, absolutely. Look, same situation. We're looking at these global brands that have got that safety behind them. Fortune 500 company with Xerox, it was a no-brainer from our end, but the reality was we needed to get client feedback, we needed to get market feedback, which obviously ended up being great, which is why we pulled the trigger on that. It was slightly longer than Jaguar, but being a Fortune 500 company, doing the numbers they were doing, it was a no-brainer to be able to give everyone in the market access to this product. And we ended up pulling the trigger on that. 4.5% semi-annual coupons, all fixed. Again, it wasn't a question to us.
Fantastic. So Xerox obviously is a household name, as is Jaguar. But when you refer to making a photocopy, you often refer to making a Xerox. So that's how how large and stable these companies are. Fantastic. Obviously, in the take-up rate for Xerox, did you feel something similar to Jaguar, a little bit different? Walk me through the reaction.
Yeah, correct. Look, I think clients have got to the stage where they understand the amount of research and the amount of effort that goes into looking at these products. We can spend up to a year doing our due diligence on any product that we bring to our client. Our track record, 7 years, never picked a company that's defaulted on interest or had a concern returning capital. So now clients understand that we are a publicly listed company. We're doing our due diligence and we're only bringing the best for them. So doing the initial 10 million tranche was very easy. We had take up straight away. We have people waiting for a second tranche as well, but lucky we've got a little bit of secondary market availability at the moment as well. Still a par value, not sure how long that's going to last, but it's all there and ready.
Actually, I'll quickly stop you there, Chris. We've had a one quick question come through on that secondary market. So that is basically a tranche that's sitting there available for investors. And we've had one investor ask how they access this existing inventory. Is that as simple? Obviously, we're going to go through the process of the bond exchange shortly, but while it's sitting there and the inventory is available, is it privy to the fluctuations of the market, or is it going to stay at par for a certain amount of time? What sort of, how does that all work? Just as the question came through.
Yeah, look, good question. Right now we've got it at par value. It really comes down to, now, I don't believe this is going to be there for long. I think we might have it for another week or so. We did have people needing to access their money due to some personal situations that occurred. We've got a little bit there. It is at par value. Depending on how sought after it is, that can change slightly, might go up slightly, but the process is quite easy. If you're an existing client, you're already set up. It's virtually us hitting a button on our end. If you're not an existing client, it will be the process we're about to show you now, which is extremely short and sharp. Get you an account and then trade immediately or when you're ready.
Perfect. So just the investor asked the question there. Probably best to email chris.sachi@bondexchange.com.au. If you aren't a client, I'm sure Chris can talk you through how to get that process set up, or at least show you how the product works and take it from there. That's probably a good segue into the next part, which is the process. So how does the Australian Bond Exchange process work? How can clients get access to these products, and all the ins and outs from A to Z? So let's start with the account opening process, Chris. One of the most simplest I've seen. Can you take me through how it all works and how investors can get set up?
Absolutely. Look, we've got an online platform. An online application form. It takes all of about 1.5 to 2 minutes to fill out. You can do it as an individual. You can do it as a dual application. You can do it as a company. You can do it as an SMSF, and you can also do it as a trust. Once you've filled out the application, if you're a company, all we need is an ASIC extract. If you're a trust, we need a trust deed. And of course, if you're a wholesale investor, we need the accounting certificate. But effectively, you get the link to the application, which we will send all of you. You click on it, it takes you a minute or two. Your account is set up, and then we're able to trade at any point thereafter.
Fantastic, nice and easy. The settlement process. So once an account is set up and a new product comes to the market, the settlement process is fast, reliable, and obviously the ABE have their own proprietary settlement engine. How does the settlement process work for the bond exchange, Chris?
Good question, mate. So two things. When you fill out your application form, there's a direct debit component. The reason why most of our clients fill that out is because there is no cap on those funds to be transferred when you're doing direct debit, because most of our clients do trade in $100,000, $200,000 lots. And as you know, there are caps with banks when you're transferring out of your accounts, which can be a lot lower than that. So you can fill out the direct debit form. When you get your contract, there are 2 days thereafter, we call it T+2, is when the settlement needs to occur. So if you've got a direct debit set up, we can do the direct debit for you. You don't have to do anything else. If you're a client who doesn't want to do it that way, you will have 2 days to transfer the money into our ABE trust account for settlement. Once it settles, we send you a holding statement to show that you are the direct owner of that bond.
Perfect. I can see here you access account statements at any point in time. Now, if a client has a accountant that they use for all their SMSF auditing, or accountant that they utilize for their tax obligations, can that accountant be added to the account for the sake of streamlining the statements and everything like that?
Absolutely. So on the application form, there's a third-party authority section where a lot of our clients put in their accountant on there so that they are across any communication. They will receive the holding statements. They'll get the end of financial year statements as well, so that their tax returns can be completed.
Nice and simple, so they don't have to worry about that cross communication all the time. Fantastic. And the coupon payments. So obviously why we're all here, to receive our income from these products. Walk us through the coupon. Very set and forget, easy system.
Absolutely. So when you do, once again, going back to the application form, there's a direct credit component. That is the account or the nominated bank account where your fixed coupons will get paid into. So you don't need to chase any of it up. We tell you in advance what dates your payments will occur. It will go straight into that bank account. So, on or around that date is when you'll get that money straight into your bank account every year.
Well, that seems easy enough.
Very.
All right, very good. And finally, the secondary market. So one of the most important factors when a bond expires, or if a client needs to exit, and we've touched on this a couple of minutes ago, providing liquidity is as simple as trading on the secondary market with the Australian Bond Exchange. But when a bond expires, what happens then, Chris? What's the process there?
Look, good question. I mean, we've got a number of our clients on this webinar today, and as they know, there's two components to it. When the bond matures, the money just goes straight into our trust account, and you can either have that money sent straight over to you, or you can use those funds to go into another bond. From a secondary market standpoint, contact your advisor, let them know you need to sell. We can get rid of it for you in about 72 hours time. And that's how long it potentially takes to have your money back as well.
Fantastic. That's actually good timing, Chris. We've just had a question come through about the fees involved, which we just happen to be going into right now. So run us through the fee structure. It's low cost, very transparent fees. How does it all work?
Yeah, look, very easy. So if you're investing less than $100,000, your fee is a one-off 1%, and that is it. If it's $100,000 or more, your fee is half of 1%, fixed, one-off, no other fees whatsoever. The only time you will incur a fee again is if you were to sell before maturity, and that will be the percentage fee you were charged initially on whatever you are selling. So, for example, if you bought 200,000, but in 2 years' time you only wanted to sell 100,000, you'd only get charged 0.5% on the 100 when you were selling to get those funds back.
Okay, perfect. Makes it easy for investors, obviously knowing all of that up front, and they're not going to get whacked halfway through with any custodian fees or even any performance fees. So performance fees are important. The bond exchange prides itself on not having lost a single dollar for a single client to date. So if there were performance fees attached, I imagine you guys would have a lot of fees to recoup. So that's great to hear. Now, obviously, what we're all here for, the new product release. So, Chris, before we go into the actual new products, we talked about the chicken or the egg situation based on demand and supply. Now, the bond exchange deals with a lot of overseas counterparties, a lot of planners, a lot of advisors who access these products for their clients as well. When you look at a new product, do you look at what your investors want or what they've bought in the past, or do they come to you sometimes and ask for certain products? Because I know it can be a bit of both. What happened with this new product, and what was the instance how this occurred?
Yeah, look, it happens a couple of ways. Now, number one, we are always being proactive and staying ahead of the curve, so to speak. So we have always got our eye on global brands, your Twitters, your Facebooks, your Rolls-Royce, the product we're about to launch right now. We've got an eye on that all the time to see where the costs are and where we can pull the trigger on it to get it to our clients at that 4.5% mark. So we're staying on top of that. We've got a lot of investors who do their own research as well. So we will get constantly contacted and say, hey, I can see that the Twitter bond in Europe or the US is looking pretty good. Any chance we might be able to get that here? So it works both ways. We look into those ones. We always take what we think to the market as a soft sounding to take it to get their feedback on it. And then we will eventually come to a happy medium where we pull the trigger on a global brand like we have just done with the one we're about to show you now.
Okay, so the active access for all isn't just about here's products that we think are good. We like to hear what you would like, and let's get access to all these products for everybody.
Correct.
That sounds great. Well, onto the product itself. So Goodyear Tire and Auto, or Goodyear Tires, long-standing business, been around for a long time, large company. We might just backtrack before we go into the actual details of the product and run through Goodyear as a company. So the sort of companies that people are looking for at the moment that the bond exchange can obviously access and turn into Australian dollar products. Run us through Goodyear as a business, Chris. What what attracted you guys to Goodyear to be able to present this as a product to your investors?
Yeah, I think for us, obviously, global brand, Fortune 500 company was a no-brainer. But I think that point 2 and point 3 are two key components. So when we look at the kind of revenue they're doing, $17.5 billion last year, a direct comparative to that is looking at the two banks that I've mentioned on point two. So the National Australia Bank and Commonwealth Bank didn't do the same numbers as Goodyear did last year. So when we look at it from a safety point of view, it was a no-brainer for us. Obviously, the key component is to make sure that there is no FX or overhead or overseas hedging risk for the client, which we ensure there isn't through our hedging with the global banks. So to get a global brand doing those kind of numbers to the Australian market as an Australian note, when we got some sounding from our clients and planners and so forth, it was a no-brainer and it was a given.
And obviously the Singapore team had their finger on the button with this one, obviously being a very highly sought after product. So that's great news to hear. Now run us through the actual bond itself. So what does it look like from a product point of view for the clients?
Absolutely. So it's a 5-year note. Again, you're going to get a fixed return of 4.5% per annum paid to you in 2 installments a year. It is a USD bond, so it's being converted to AUD. And most importantly, it is available to each and every one of you. So it's retail and wholesale. We are already getting soft orders in. I'm not sure if your next slide says it, but it's only a $10 million initial tranche. So we've already got some soft orders that have taken a fair chunk of that. So we need to, for those interested, need to get in quickly to ensure they don't miss out.
So actually, I'd like to touch on that point, Chris, if we can. And we should have probably mentioned this earlier, but all these products are available to not only wholesale investors but retail investors as well. And retail, we know it's very hard to access complex products, or has been very hard to access.
It has.
Being the first of its kind, you can offer these products in as small a tranche as $10,000. So.
Absolutely. So that's been the key. Many of our clients previously couldn't get access to these bonds because it's hard to, not many people have that $250,000 or $500,000 lump sum to put into bonds, which is what it needed to be years ago. So with that $10,000 minimum investment, it's quite easy for people to get into now.
So on that exact logic, so an investor with a portfolio of $100,000 can diversify themselves effectively across borders into different currencies, but more importantly, diversify themselves across up to 10 different products, offering different yields, different timeframes, and achieving basically cash flow month in, month out on a traditionally very hard to diversify amount of money in the bond market. So.
Exactly. And look, I think the big thing for us is we try to get our clients as many payments as we can over the course of the year. So each bond tends to be on 2 different months of the year, those 2 semi-annual payments. So with Goodyear and with Xerox or Goodyear and Jaguar, all of a sudden you're getting payments on 4 months of the year. So effectively getting a quarterly payment and getting a 4.5% coupon compared to what the banks are paying now is a no-brainer.
And have you seen many clients diversify away from, say, a current traditional over-the-counter bond into a product of this nature because of that, the freedom they have over the time of the year?
Absolutely. So with these, they're always talking about safety. They're always talking about diversification. So we've had a lot of clients come to us from various parties looking to do exactly that. And that's why, thankfully, we've been as busy as we have been.
Yep, fantastic. So actually, you touched on it before, but let's go into it. The new product issues. So a new tap of $10 million going out to the Australian market. There will be a secondary market available. Now, like the Jaguar, there was a second tap, but obviously you guys can't guarantee second taps of products. It'd be nice if we always could, but it's not always there. Give me an indication of your feeling for the market on this particular one, Chris.
Look, the way the market is at the moment, we're very happy we could get the 10 million. We weren't sure that we could at the time because it was very, very sought after. So to get the 10 mil, we were very excited by it. Obviously, we want to ensure that our clients are getting it at that par value around that 4.5-5% mark. So I cannot definitely say there will be another tranche. Obviously, we'd like the opportunity. If it arose, we'd jump on it. But with the markets the way they are at the moment, it is quite difficult to get such popular brands with second and third taps. So my suggestion would be try to get in on this first initial tranche at 10 million at par value. And of course, if the opportunity arises, we will pull the trigger and get more.
Perfect. And obviously the rate at which the bond exchange is growing, being a listed business now, you're going to aim to do as many of these as possible. But from what I can see, you'll only push the button on a product when the price is right, when the coupon is right, and if the company itself is right. So ticking all the boxes all the way along.
Absolutely, and we won't do it any other way. We want to keep our level and standard as high as it has been. So we're not going to drop that level at any point in time, and that's what we will live up to.
Fantastic, great to hear. So we've had a couple of questions come through just as we've been talking. Where can people find the application form to become a client, Chris? Just quickly.
Yeah, sure. Look, on our website, the application form is available. What I'll do to make things easier, I will email all attendees this afternoon. I will provide them with the link to the online application form. They will then have my direct contact details as well. And they can call me directly. We can arrange a time to chat, to walk them through the process if need be.
Perfect. And just for those people watching, if your advisor has asked you to watch this, then obviously feel free to send them the recording as well, because we often have a lot of advisors making inquiries on behalf of their clients at the same point in time. So I'm very happy to have those discussions as we go. So before we finish up, let's just quickly go through the process again. So for those people asking, this will take care of a lot of the questions that we've had. The bond exchange process. So it's a simple online application. As Chris mentioned, he will email it through. It's fast and efficient settlements. Now, if you're dealing with an advisor or you do everything yourself, we're not fussed. The bond exchange is happy to have a discussion with you about how to best settle it. The coupon payments are set and forget, and the bond exchange obviously is aiming to provide enough of these products over time so you can have a reliable monthly income stream whilst your capital is remaining secure. And the liquidity process is extremely simple. Either you sell out on the secondary market if you want to liquidate, or obviously you wait for your coupons your product to mature. And obviously the most important is that low cost and transparent pricing. So that's about all we have today. We've had one other question come through. What is the lead time on the two products? So usually the lead time going in, and correct me if I'm wrong, Chris, is usually about 2 to 4 weeks. So on that note, let's get to the Q&A while we're here.
So, yeah, just on that, Tim, you are right, mate. Usually it is around that 4-week period, but because of how popular Goodyear was, we had to pull the trigger on it pretty quickly. So we've got about 2 weeks to finalise all orders for Goodyear, because we will have that ready to go by April 7th. So anyone who is interested in that one, we will need to have all of that set up and completed by the first week of April.
Okay, perfect. Hopefully that answers the question. But again, we'll try and answer all questions to the individuals as well, so we can give you a more comprehensive answer as you need. I've had another question come through just regarding research on these particular products. So does the bond exchange do its own research? Does it publish research? Probably I think I know the answer, Chris, but I'll let you take it. What sort of research goes in on the back end into these products, but also what research can investors access as well?
Yeah, absolutely. Look, as I said, we've got the team out in Singapore who goes looking for the products, does their initial due diligence. We've then got an internal committee as well that review it. It's a 3-step process. We've got an internal committee, we've got an external committee. We're also partnered with the bond advisor. We look at various research from global banks. We utilize CreditView, which is an independent research house overseas as well. So there are a lot of components that go into it. And then what we do is we put a summary together on a key information document of which we can provide to the client. So they've got access to all of this information before they make a decision.
Okay, perfect. I've got a couple of questions that have come through regarding the research, regarding the settlement. I think we've covered most of it, but just to reiterate, Chris, the settlement is done via the trust account. So just like you would for a normal equities account, a client can direct debit into the trust account, and then those funds will settle upon the confirmation day of the bond.
Correct. So yeah, we can do that. So what we tend to do is we can collect the funds early. It goes into our trust account. On settlement day, we exchange the funds with the relevant party, and then the client will get a holding statement to show that they are the direct holder of that bond.
Perfect. I've had a question come through from a Leanne. Leanne just wants to know what percentage of bonds should be of your overall portfolio, if I've said that correctly. So This is a difficult one. So without giving too much advice, we recommend generally about 30 to 40% of an overall investment portfolio be in the fixed income space. And that can vary depending on obviously the size of your portfolio and how diversified you would like to be. So Leanne, on that one, I'd probably suggest reaching out to Chris directly and having a discussion around about the investment advisors there. I'm sure would be happy to do a portfolio review and look at your overall portfolio, and we can give you a couple of indications on the best place to go. I've had another question come through, which is also the best way to find out if wholesale bonds are available or not. So Chris, do you want to field that one? That's probably best from your end.
Yeah, look, absolutely. So I think the best way to deal with that is now we've got access to bonds that we feel are safe, yet are wholesale. So for that client or prospect, if they speak to me directly, we will always keep them in the loop of any new bonds that come to the market. If they are a wholesale investor, we will have that flagged already. So I would speak to them, or we as a team would speak to them directly the moment any of these bonds become available. The same way we go to the market with the retail bonds, we would do the same with the wholesale.
Okay, fantastic. And I'm sure there is a distribution list that clients can get on for inventory of wholesale bonds, not just in these products, but wholesale corporate bonds when they are available as well. Perfect. Well,
absolutely, and we can sort that out on our back end for sure.
Terrific. I think that's just about it. It seems to be all the questions around the have come through the are of a similar nature, so we won't focus too much more on the Q&A. And I think we're out of time at the minute anyway. Chris, is there anything you'd like to say to the investors or leave everyone with after today's presentation?
Yeah, look, I think it comes down to each of you need to work out, from a investment point of view, what are you trying to achieve out of your investment? Generating income is a common feedback for us, and keeping your capital safe. With our corporate bonds, we can create you a portfolio that can provide you with the income, provide you with the safety required so that you can go to bed at night and not be worried about waking up and wondering if your capital's gone up and down, which is the volatility of the market in shares and so forth. So reach out to us, let's have a chat, go through your situation, advise you accordingly, and go from there.
Fantastic. Well, Chris, that's probably all we've got time to. So thanks for joining me and taking the time.
Thank you, mate. Appreciate it.
And again, if investors have any other questions, feel free to reach Chris or the Bond Exchange directly, and we'll take it from there. So thanks, everyone. Have a great day.
Thanks a lot. Take care. Bye.